One. Hello, everyone. This is Gary Wilson, and welcome to this week's Path to Prosperity podcast, which is real estate investing for professional men and women. This is for you. You're a chiropractor, you're a dentist, you're a pilot, you're a fireman, policeman, almost always professional in your field, and quite often business owners. And we invest honorably and ethically in the areas that we do invest in because it is win-win, and you can definitely make a lot of money doing it and be proud of your properties and have a good client base too. So it's not the no money down stuff. That's what you're here for. It's there's a place for that. It's just not every place. I'm not against it. I've done it myself. But what I want you to recognize is in investing, I want to get you to be working more in cash because it puts you more in control. You can do it. Many people have, including me, use me as a model. You can still be creative, okay? But do it strategically so that you're in control. Also, if you haven't subscribed yet, please go ahead and do so. It's on Stitcher, iTunes, iHeartRadio, probably 3 dozen different channels. And if you want to be part of the community, more a part of the community, investor agent community, go to myinvestorservices.com, click on members area, go into the silver level, which that's what we all are, including me, by the way. And we network, we do joint ventures. We've got investor agents out there trained to work with us investors, over 3,000 strong across U.S. and Canada. So in any case, welcome aboard to the podcast. Without further ado, I want to introduce a good friend of mine, Dave Gambaccini. Met him back in June of 2015. It's been over 4 years. And he's done a great job in his business of serving investors in the New England area. So Dave, welcome aboard, man. I appreciate you taking your time to do this and share your knowledge with everybody.
Gary, thank you. I appreciate it. Like you said, it's been a while, so thank you.
Yeah, it's good to see you, and hopefully you've been able to hit the surf a little bit in the last year or so.
Yeah, it's you and I talked about this.
Yeah,
it's unfortunate that when is the fall, and I'm starting to get a little old, and I don't like the cold water as much as I used to, even with all the suits. So
yeah.
I got some surf in the summer. Haven't been able to travel and do much, but I've certainly been enjoying the East Coast surf for a while.
Yeah. Well, last year, I'm in the course of my 50s now, and in the 50s age group in Virginia, I was ranked the 9th worst surfer in Virginia.
That is quite an accomplishment. Thank you. That's fantastic. It makes me feel better.
There you go. So in any case, hey, now some folks listening to this, Dave, are going to maybe be familiar with your name in the New England area, but for those who aren't, we've got listeners in 28 different countries now. If you could just paint a picture, give everybody a background and who you are, whatever you feel like paints a good picture for yourselves, because it'll help people create a context. So when we start talking about transactions and case studies of other clients and stuff like that, it probably will make a lot more sense,
Sure. So hello, everyone. As Gary said, I'm Dave Gambaccini. I'm in Bedford, New Hampshire, which is right next to Manchester, New Hampshire. It's about an hour north of Boston. I am a commercial broker, really focusing on investment sales. I am a CCIM. If you are or are not familiar, that's a certified commercial investment member. We can talk a little bit about that too. I've got some, I'm scheduled to be president for the chapter next year. So
awesome.
Yeah, a lot of what I've been doing to get where I am, such as that, where recognition within the CCIM Institute. So it's fantastic. But anyways, I am a certified commercial investment member, CCIM, board member with the chapter. I do service. Really, we've been able to establish a footprint nationally. I do focus locally for assets, right? So buying, selling, leasing, a little bit more local. When we go on the national platform, it could be more capital markets. I'm able to raise some equity, some debt, some syndication, and we can expand our footprint. I'm currently with SVN Commercial Real Estate Advisors. With the local footprint, I'm focused on trying to really build the brand. My business partner and I are trying to build that brand up a little bit and expand, opening some additional offices. So personally, locally, I don't have the presence that I used to with signs on properties. But once again, we're doing a little bit of different approach for the local, a couple more folks to do that for, so I can continue to focus on the larger assets, capital investing, capital markets, things of that nature.
Awesome. So let's go back to the beginning. when I first met you back in June of 2015, how long had you been in the business? And what was your what was your direction at that point? And then since then, um, what have you noticed? How have you grown? I mean, I know obviously you worked with investors. That's what you and I worked on together. We talk a little bit more about that the beginning years, because I want people to recognize this. All of us started at the beginning. I mean, I wasn't born this way. I mean, I got where I am because I had a lot of help. Number one, or number two is I knew there was more, and I wanted to be where there was more. And I finally realized, man, you got to think at that level. And in order to do that, you got to hang out at people at that level. But so that was. But back to you. Talk about the beginning times and what that was like, and what was really your what got you moving forward, seeing that vision, that type of stuff. You know.
Sure. And, you know, I've said this before, Gary, that, you know, it's, you know, for everyone watching the podcast, Gary and I really haven't connected in a few years, right? Because where he met me was with a residential firm, and I took a hard right and followed the path that I'm on now. So Gary and I haven't had a chance to directly talk. We've had a couple exchanges here and there, but I'm just letting you folks know that it is very interesting. What drew me to Gary and the path that I'm on is it was just a coincidence that I had a very thought process to Gary. I knew I wanted more. I knew I needed to do something different. What I was doing didn't feel right. So to back it up and to make it make sense, I started investing in New Hampshire in 2006. Wasn't the best or the smartest time to start, but you know, it was easy. It was easy because all you had to do was stand in line and they handed you money and you could buy things. And that's what happened. That's what I did. You know, I'd been in corporate America for, call it 12 or 15 years, whatever it was. And I had done well and was a single guy. And I said, you know what, I'd gotten to know landlords in the area. And I thought, yeah, I can do that. You know, I grew up in a family owned construction company, and I have a degree in science and all these different things. I thought, you know, I can manage a building. That's fine. So I bought a small 2-family in 2006, and of course learned every lesson the complete wrong way of owning, you know, a 2-family when you're purchasing it at the height of a market. So I struggled with that property for a very long time. But I eventually started trying to figure out how to get other properties or how to make some improvements. Just to fast forward, you know, I never really owned anything more than, you know, 12 or 15 units. I was never a large owner, and it was just me doing everything. And it was a lot of work. You know, snowstorms were a big deal because I did my own snow removal, right? Here I am in the Northeast. So, you know, things like that, you just, and I, you know, when you're that size, it is very hard to give up control, not just because I'm a control freak and I want it done my way, but because there's not enough finances there to really, under that 15 units, that's almost the break even. Under 15 units, man, it's really hard to pay someone to manage properties for you. So you're sort of tied to those properties, doing it all yourself. For me, because I wanted more income out of the property. So anyways, I was managing my own properties, and, you know, and I was in and out of a couple, letting some go and taking my hits. And, you know, I was just barely staying alive with these things. And at the same time, I was sort of just I had enough of corporate America, sales, and everything I was doing. And I said, that's it. I got to do something different. And it was the idea that someone said, you should do real estate. You clearly know it. And I thought, you know, that's not a bad idea with my background and my history and understanding of buildings, and, you know, great, I'll do that. And I wanted to be able to, I wanted to get my license. I got my license to try to provide this to other people. So I started trying to just help other people. And eventually was the path that, yes, go to get into a brokerage house. And the easiest path is into residential. So I got into residential, and I did quickly learn for me, right? And I just knew that it was just single family purchasing for families is different. And it wasn't exactly where I wanted to be. And I knew it. I knew it immediately. And it wasn't that long. And then I saw your program, the investment program, come through, and I thought, wait a minute, this is interesting. You know, I only had my experience. I didn't have any other education or training in it. I just had my experience. And I thought, well, this could be good because maybe I could learn this and do a better job than what I'm doing now.
Mm-hmm.
Get away from single towards multi. My first concept of this is, I know, I'll do these investment properties. I'll do multifamilies. That's what I thought. The call it Manchester, New Hampshire market, Southern New Hampshire market is, it has its sweet spot really is the multifamily when you talk about that kind of, how can you service a wide array of customers at different price points, and the multifamily market fits that pretty well. So anyways, I took your program.
Mm-hmm.
And it was, the light bulbs just kind of kept popping. And I just kept realizing, oh, I could do this. Oh, I could do that. It was, your school reports, right? I still talk about the school reports. There's some other reports. They were free. It was free public data that you were showing us how to leverage differently.
Mm-hmm.
And I've told this story before. You've heard it before. I was sitting in a closing. I was helping a buyer buy call it a condo or a townhouse. And I knew from the history of the property, these developers had flipped the property. They bought it as a foreclosure, they gutted it, they redid it, and they're selling it. Okay. So I helped my buyer, and I was aware of these guys that had done the flip. And I tried to talk to them a little bit at different times. There was just really not an opportunity. So here we are at the closing table. The listing agent didn't show up, but these builders, these guys that flipped the property did show up. So I'm sitting with these builders, and I'm sitting there with my client to help buy it. And they just happened to start asking me questions. And they said, they asked what I did and with real estate. And, they didn't know if I focused on these types of flipped properties. And I said, well, and I started introducing some of the techniques that you had taught, the school report, and I start naming off these things, and I could see them looking at each other. I kind of knew what was happening.
Yep.
So they're showing interest, and I purposely kind of feathered it in so they heard enough. And sure enough, I think we got outside closing. They called me and they said, "We're outside. Can you come and talk to us?" And we've never heard someone. We look for flipped properties. They said, we specialize in. We don't know how to find them. We don't know where to consider a good property. We've never worked with an agent that really has anything like that. Can you work with us? Can you help us? And that really was that, once again, another aha moment that I said, oh, okay, this is working. So I started helping those folks, and it did work with a few other folks. And the only thing I saw was, okay, this is great. But when you're buying a foreclosure or pre-foreclosure, or when you're finding these properties that need improvement, it's a lower price point. And I get it. I get multiple transactions. Don't get me wrong. I help them buy it. They renovate, help them sell it. No problem. Multiple transactions. And I just thought, okay, well, I got to take this to the next level. I've got to figure out how to elevate all of this information into properties, next level people, higher net worth people, higher revenue generating properties. So I just kind of kept searching that out. And for me, it led me to commercial real estate, right? It really quickly popped me right out of residential. And I said, yeah, okay, this is fine. Single family resident flips, 2 and 3 and 4 units are fine. I want to do large multifamily properties and figure out how to do commercial only basic property.
Right.
So I really got into the commercial, and also because of what you had, these tools and techniques that you had shown regarding basic investment strategies was the precursor for me to understand CCIM.
Yeah.
I was working with someone who was a CCIM and who encouraged me to look into it. So it was that, once again, just a smooth transition of where I saw my strengths and my desire to be. And I thought, okay, CCIM makes sense. Gosh, it's a lot like Gary's program, and deeper dive into investment analysis, market analysis, financial analysis. And it really digs deep into that specifically for commercial properties. Of course, that knowledge can be used on anything, but it's geared for the commercial market. So I jumped into the program. I jumped into CCIM, and one thing I knew, look, I'm later in my career, I didn't want to spend 5-7 years with experience, or, the CCIM program can be on average a 4-year program, right? People do it in 2 to 4 years. Some take longer. You kind of go at your own pace. And I knew I didn't want to spend too much time. I just needed to get the information and go. So I did the CCIM program in 15 months. I said, I need this. And I just jumped in and I punched it out, and I dove right into the CCIM network with our chapter, the New England chapter, and I got involved. And once again, it starts opening those doors. Now I'm exposed to higher net commercial-based properties, off-market deals, equity opportunities, trade commission for equity, and just really interesting exposure to a completely new network. So, now I'm really focusing on investment properties, but I'm not a specialist, right? In New England, you're really a generalist. We don't have enough of one asset. Let's say north of Boston, right? You get out a little bit outside of Boston, and Boston is a completely different market. So I say that in the sense that sure, it's right there, but it's not the core of my business. It's not where I focus. So I'm a generalist, and I started focusing on investment properties and of course doing all asset types. And really what it comes down to is it's not just multifamilies. It's anything that's producing income. If you have a P&L, you have income and expenses, bam, I don't care what it is, it has an investment opportunity. So you start digging into that, and you start digging into the people that own businesses, that need to sell the business. They want to reevaluate their business. They want to look at their finance stand. Should they continue to lease or should they purchase? They want to see, should I take money out and build on, or should I take money out and buy a new location? Should I start a second location? So there's all these things that come out of the CCIM world that give me the opportunity to work with business owners and property owners and investors to really understand the complete financial landscape of the business they're in and the world they're in, the assets they own. The asset could be the business. The asset could be the real estate. I can renegotiate leases in a much different way than just saying, well, just sign the lease for another 3 years. Well, if you really tie that to your business, you can really understand your P&L over, your 7, 10, 15, 20 year hold periods. And it's very interesting. It's compelling. You get when you get into these high level conversations with the folks that want to understand it to make better business decisions. Great, powerful conversations.
Well, I tell you, you touched on some really key points there. And by the way, I appreciate you sharing all that. So what first observation is your path, your progression. What's interesting about entrepreneurs, you've got that entrepreneurial gene flowing through your veins. And you and I have similar backgrounds. I mean, my degree was in computer science, right? And I was in the corporate world for 18 years. So you're smarter than me. You got out of it earlier than I did. But similar paths. So one of the things I love about working with people like you is you have enough desire and ambition to succeed and grow, to develop that future vision. I mean, you're grounded in today. You're taking action today, but you have one eye on today, one eye on tomorrow. And you realize that if you've learned from experience, you take that first step, take the next step, because that leads you to see the next step more clearly. So a lot of people get caught up, they're either all in today or they're all in tomorrow. It takes a special person to be in both places at the same time. One eye on today, one eye on tomorrow. And when you take that next step and all of a sudden the horizon starts to roll forward, you see the next thing that's available to you. And you've taken it to heart. You got your CCIM, started off with duplexes and flips, and now you're working with big buildings and anything, like you said, that makes money. Because once you learn the principles and the fundamentals, they never change. The markets may change, but the fundamentals don't. I don't want to ask you something. You started talking about people and coming in and investing, and they're leveraging their businesses, which is another key point. Anybody listening to this, I love working with business owners because they have the vision of leveraging their business to get more passive income through owning real estate, and vice versa, by the way. When you got both business and passive income from investment real estate, you can leverage the two together to grow exponentially. But I want to ask you a question, if you don't mind, just you started making me think about the area, because I've been up there. I love New England, man. I just love the culture, the vibe. There's so much to do. It's a beautiful area. And one of the things I recognize is, and I've seen this all over the U.S. now, is the level of foreign ownership that's been occurring in the last generation. So what have you seen as far as that's concerned? Of the who's owning the properties now, out of state, out of country, and how's that affected or impacted your personal business? You know.
It is very interesting. You know, you figure a market like New Hampshire can be looked at and considered kind of a sleepy market. Mm-hmm. Only because outside of New England, people just they know Boston or New England as a whole, right? So investors don't necessarily target or think of, geez, I'm going to put my money in New Hampshire. So what we found in general, let's just call it the New England market. What we found in general is when you start looking at Connecticut and the Boston markets, they're really strong markets. There's not a lot of inventory, and obviously with the rates being as high as they are, not the low interest rates, high purchase prices, low inventory, high demand. Mm-hmm. It means, how does a guy like you and I get in on the market to purchase something? It's difficult. You've got to be a level of investor that says, yeah, I could probably overpay because of whatever I have behind me. I can pay a little bit extra because this market is tight, and I'll hold it for 20 years or some. There's got to be reasons why you could enter the markets if you really need to be there, or you're a capital player or a national player. So it's different. But what happens is, because of our properties, and once again, so I'm licensed in New Hampshire and Mass, and my business partner Larry is. We have agreements to kind of basically work nationally. So we're ending. I have a $500 million development in Hyde Park, New York right now. So we're raising $20 million for that, right? So I'm kind of all over the place. Question: what we have found is investors that would typically say, I need to be in Boston. They went north. I need to be at least in Andover or south to Boston. They push a little further. I'll go to Salem, New Hampshire, and then but really I want to be towards Boston. Now they say, what do you have in New Hampshire? And what we have in New Hampshire is simply a little bit more inventory, right? The values are always purely based on a P&L, right? Your income and expenses. It's really boils down to it. Everyone evaluates a little bit differently. They add in different expenses, but at the end of the evaluation is, income and expenses. And of course the capital improvements, and that goes a long way. But what we see is a lot more over the last probably 3 years. We've seen a lot more out-of-state owners. We can, such as that. Just call it out-of-state owners. And in the past probably 1 to 2 years, I would suppose it is creeping up that I actually do have foreign investors. I have several foreign investors, and they have a level of frustration because they have the means and the income. They're high net worth individuals. They might be single family offices, and they're saying, look, we've got a truckload of money, just buy us a property. That's still the challenge. You have plenty of money. I'm still not able to find you those properties, right? We love to target, 1 million to 25 million, right? That's a good market. I had a 144 unit brand new apartment complex, 23.5 million, whatever it was, dollar property. And it was, when I say this, if we understand the context, I was calling national apartment complex owners, local investors for $23 million to buy this property. I was calling national, and I'm saying, I spoke to California, Texas, Florida, in the Boston market, right? I had them all over the place. And there was no problem with them all saying, here's the NDA, give me the financials, give us a week. Here's a letter of intent. I mean, it didn't necessarily matter the actual location in New Hampshire, because it was further north than most would think. They looked at it and said, it's new construction. And here we go. Now, what I did have is foreign investors that had caught wind of it more locally, who wanted to come in and grab this thing. So, like I said, we are seeing, and I am seeing, more foreign investment money that is looking to be parked somewhere within the assets that we have, or wherever. We've had folks. We raised I had an assisted living project where same thing. We were kind of offering to run as quarterback. So we were trying to bring everything together, and they said equity. Sure, we can get equity. We had, through our relationships and our contacts, we got a seat with Beijing Capital, and Beijing Capital offered us a substantial amount of money. We brought that money back to New Hampshire and said, here you go. For other reasons that were relating to the partnership, the deal kind of went a different direction, and it changed. You know, it changed, and they really switched focus on what they were doing and how they were doing it. But Beijing Capital came to us and said, hey, well, listen, we appreciate what you guys brought to us. Can you help us in Florida? So they're just asking us out of the blue, hey, well, we liked what you had up there. Can you go somewhere else and do something for us? And and we're being asked to place debt, right? To place, we're being asked to go find them properties, and it's interesting. So I am seeing an uptick in, directly right now. And that story I told you is
right.
That's current. So,
Yeah.
We do have a couple other same thing, foreign investors that they just flew in and they were here for 3 weeks and now they're gone. It's very interesting. And there's someone in Greece,
Yeah.
right? And so I have these investors that I've met. I've been shaking their hand and working with them on some stuff, and they're back overseas now, and it's very interesting. And their frustration is, well, I have the money. Why can't you find me something?
Right.
It's a very challenging market right now. Prices are high, interest rates are low, inventory is low, demand is high. It's a perfect storm of a really difficult market to enter.
Right. What's interesting is, with all the stuff that you see on the news, it makes it look like, it's very difficult for foreigners to invest or do anything with the U.S. right now because of all the stuff they see on TV. But quite frankly, it's not true. I wrote a white paper about 3-4 years ago on foreign investors. In fact, I'll send it to you if you want. In the United States, it's actually easier for foreigners to buy properties here in the United States than sometimes it is to buy in their own countries.
Yeah. Yeah.
So I wrote this white paper on what's required of foreigners to own properties in the States, and it's actually not that. It's like it's a process. And by the way, if you need somebody in Florida, I've taught several hundred agents down there. Just same thing I taught you, David. And so I'll help you make a connection. Just you get
Great.
the referral, you get that. I just have the pleasure of taking advantage of the network we developed. But hey, so back to you now. We talked a little bit about the who and the what and the how and the where. And you touched on timing, like you bought your first property back in, I think, 2006. And I know what you're saying. It was like, things were screaming along. The banks were just throwing money at people. It's like, boy, this was like the roaring 20s. And all of a sudden, late 2007 hits and it goes kapooey. But relative to timing, we believe we're at or near the peak of a market. Nobody really knows. I mean, this thing could keep going along for another 10 years. I think we got a few more good years out of this before it starts to cool off. But I'm just my opinion. But what have you recognized when it comes to investors? I mean, what I recognize is the investors are always investing. It's like, we really don't care what the economy is doing. I mean, we want to know what the economy is doing, so then we know what strategies to apply. But the reason I love investing and working with investors is we're entrepreneurial. We have a strategy for every kind of market. But have you seen that? Like, maybe give a case study of one of your investors who maybe one that bought something back in the recession, and maybe one that's bought something recently, and any common character traits or anything like that you can think of case study wise, because I want people to see that, man, anybody can do this. I know it sounds like a cliche. You just got to plug yourself in, So if you wouldn't mind, talk about the timing a little bit,
And it is interesting, and I think that I think current real estate and future real estate in our economic climate, politics, everything that goes into it, I think has changed significantly in a way that I think we'll see more normalization for our future years. Future years, call it 10, 15, 20 years, right? And who really knows? But you look at any economic forecast, you look at national economic forecast, local economic forecast, you talk to economists, you read and understand what they're saying about the trends in the US from the 20s, from the 1900s to present day. There are plenty of factors that have gone into the real recessions that we'd like to believe that we have corrected. Mm-hmm. And that we should not see. It's hard to say, right? And I'm not an economist, but we're not likely to see another bubble like we just did, the 06, 08,
Mm-hmm.
10. We're not likely to see that because they've recognized, and people were recognizing it then, they couldn't stop it. But that's not likely to happen. Anything is possible. But my point is going back to like a potential case study.
Mm-hmm.
There's an investor that I work with. I didn't help him purchase this, but he tells the story that the one constant about real estate is that typically it's not fast money.
Mm-hmm.
If you want to do your flips, that's fine. You want to turn something quick, that's fine. And certain things can happen. But your real estate is a buy and hold asset. It's paper. It's not a bond. It's a buy and hold asset. He bought, I forgot the number of units. I don't know if it was 100, but he bought a substantial amount of units. And I'm going to get the town wrong. I probably should get it wrong just so we're not disclosing too much. But let's just say in the West. So out West, he bought this thing in 98 or something, and nobody wanted it. It was kind of banged up, and he bought it for a couple $100,000. Okay.
Mm-hmm.
And it was rough. It took him years to turn that thing around, and it was a lot of work and a lot of money. Now, granted, he had the financial ability to stay with it, to pay someone. It was out West. He wasn't going there. He just kept paying someone to, hey, turn it around. He just kept making all the capital improvements, all the necessary management improvements. He just kept, and he owned the property 16, 17 years, 18 years. He owned it through all the massive ups and downs, right? The real hard ups and downs. He held it. He just held it. He just sold it for $3.2 million.
Nice.
And the reality is, people say to me now, well, I'll wait till next year. I'll wait a couple of years because the market's gonna go back down. No, it's not really. You're gonna have a shift in the elements that I talk about. Demand might be less. You might have more inventory. Who knows where interest rates will be? But you'll be able to purchase something. You would like to believe, well, the prices are way too high right now. Gosh, they want $1 million for that. I'll wait a few years to get it for 600. No, you probably won't.
Right.
Maybe there's a little swing in what the value of these properties are, but the overall asset is not going to simply depreciate the way that you think. You have these, a lot of people have in their mind that, well, I'll wait till rates go back down, or not. I keep saying rates, but I think you understand what I'm saying. The values. Wait till values go down and it's more affordable. It's all relative. Yeah. And you look at that. You look at that global economy from the 1900s till today, and as many ups and downs, it still has an upward trend.
Absolutely. Yeah.
We're not going to just all of a sudden go back down, and you don't want that, people. That's what we talked about. Those are the recessions of different kinds that we've had where it's down low. Sure, everyone buys then, or savvy investors know to buy then. That's not what we're talking about. We're saying, sure, interest rates and inventory can fluctuate, demand can fluctuate. So you might get a little bit of a better entry point.
Right.
But don't hold out thinking you're going to get a Cinderella deal. Invest now based on the income and expenses, buy it appropriately for what the market is bearing today, and don't expect to get a return in 3 or 5 years. Know that you got to hold a minimum, maybe 7, 10, 15, or 20. If your investment strategy is to get out sooner, then you do have to purchase something different, either a different asset or a flip, or purchase it for different reasons. But in general, I see a relief of some kind. Maybe rates keep coming down. I mean, the bond is incredibly low right now. Was it 1.7 something as of yesterday? 10-year treasury. So there's a lot of factors that, look, I am not a specialist in those things. I just pay attention. I understand it enough. I can regurgitate it. I pay attention to the economists. You look at 1900 to today, and nothing is going down and staying down.
Right.
You now and be comfortable and confident. Align yourself with people that can help you manage it properly. If you got a business attached to it, find out how to leverage your business and your commercial asset, and just make a strategy that has a little bit of runway, so you can say, hey, I'll stay in this for 10 to 15 to 20 years, stay even longer, and there will be a return. In 15 or 20 years, we'd like to believe, hard to know, you'd like to believe the market has continued to just creep up. May have some dip, stay in it. It's not a fire sale. Real estate isn't a fire sale. You don't just get rid of it. Hang in there. Yeah. And if you can hang on to it, you've got, you're paying down your debt, and you're earning income every day that you own it. So stay with it and let it work for you. Put your money, I think you and I talked about this a lot, put your money to work. That's it.
A couple of key points there, everybody listening, is number one, real estate is a very forgiving commodity to invest in. You could make a mistake in real estate and still make money. Like they said, you got to hang in there, you got a staying power. But a couple of things here, people that have that, they say, I'll wait for something. I'll wait for this, wait for that. There's a famous saying I had. There was a mastermind group of men called GoBundance, and one of the founders, David Osborne, wrote a book with another fellow named Paul Morris, who's a big, manages 3.
Wealth Can't Wait.
It's called Wealth Can't Wait.
Wealth Can't Wait.
One of the famous sayings is, don't wait and buy and wait. Yeah. And the third thing is the last big recession was an anomaly. It was driven by real estate. And almost every other recession, real estate is a factor, but it's not the leading factor. That was extremely rare. If you look at almost all of the recessions across the board, yes, the values are going to go up and down a little bit, but very mildly compared to most other commodities. The last recession was an anomaly. I'm not saying it can ever happen again, but the next recession is probably going to be a good old-fashioned, bread and butter, a basic correction. Overheating, cooling off. It's a lot of psychology anyway. So everybody out there, like a farmer. You ask a farmer, hey, when's the best time to plant a tree? They're going to say 20 years ago. You just got to get in the game at every step of the way, and make sure you align yourself with people like Dave. And Dave, we're getting running out of time here, but I want to tell you, that last part you just said, that was critical. Everything you said today was absolutely critical. And I appreciate you taking your time and energy and every day. I know you got children, and you're a successful guy, and I'm just so grateful that I met you years ago, and you're one of the shining examples of what's possible when you do apply yourself and take it. You got to take action. You got to take action to get results. And I think I speak for everybody when I say thank you for you listening to this. And by the way, for people interested in investing in your area, I will tell you this, guys. I've made a fortune, help other people make fortunes investing in the tier 2 and tier 3 cities and towns. I know it's glamorous to be in Boston, New York, and LA and San Francisco and all that. But I tell you what, Bedford, New Hampshire, Lafayette, Indiana, places like that most people don't pay attention to, the valuations or the returns based on cost basis are much more appealing. It's less competitive. And so if you're interested in making some money, get a hold of this. So Dave, how can folks get a hold of you? Email, phone, website, help us out here if you don't mind.
Sure. Cell phone, it's a New Hampshire number, 603-540-1433. Email, obviously, I don't expect anyone to be able to spell Gambaccini, so thankfully I got a hold of that. But the email is dave.gam, dave.gam@svn.com.
Awesome. Hey, and for everybody listening, if you like this stuff, we got lots more coming your way. Just subscribe to the podcast. It's on any number of several dozen podcast delivery channels. Go to myinvestmentservices.com, click on members area, check it out, become a member, associate with all the other investors around US and Canada, and meet up with people like Dave. I mean, there's lots of us out there. I mean, you've in order to get to where you want to be, you got to think at that level. In order to think at that level, you got to hang around people already at that level who are at where you want to be. That's why we have the community. So thanks for participating and listening, everybody. God bless you and your families. Dave, particularly you. God bless you and your family. And we'll see you on your path to prosperity.